Hello guys, welcome to my channel. Okay, today I want to talk about where you can actually put your entries and where you can put your stop loss, and then how to maximize your reward. Okay, as you can see here, normally in an uptrend, okay, so you will have what do you call the trending is on a bullish market will be trending upwards somewhere here, making a high and higher low, then a higher high, then a higher low, then a higher high. Okay, so once you've identified your trend, okay, normally you will put your entry. Okay, let's say you didn't cash this entry here, you only managed to cash your entry somewhere here. Okay, so let's say you put your entry here. Okay, so first of all you need to find your risk first. Okay, before you can actually find your reward, I will always recommend you find your risk first. Okay, so in this case, let's say you normally put your risk your stop loss somewhere here below the previous swing low. Okay, and then you put your entry and then take a reward somewhere here. Okay, so that's how you calculate your risk reward. I'll show you shortly how to calculate your risk reward. Okay, but if you are slightly a bit concerned hitting a stop loss all the time, or broker is hunting stop loss, or you're worried your stop loss is too tight towards your entry, you also can put your stop loss somewhere the previous swing low. Okay, so this is your first swing low and this is a second swing low. Let's say this one H4 or H1, you can actually take this as your another stop loss. Okay, it depends on your risk appetite. Okay, so normally I would recommend to put slightly one, or let's say the second previous swing low. It depends on time frame. If you're on a daily, definitely you don't want to go into the second previous low or swing low. You want to go on the first swing low. Okay, but if you're on the M15 or H1 time frame, then definitely you should go for the two previous swing low. Okay, this is on the bullish uptrend market. Similarly, if it's on the bearish market, you see the market will be making okay, something like this. Okay, so it makes a high, it makes a low, then it makes a lower low, then lower high, lower low. So similarly, if let's say you cash entry here, you can put your stop loss somewhere here or somewhere here. Similarly, let's say if you miss that entry, you only manage the entry here. Okay, then you put your stop loss here very tight, or if not, you can put your stop loss there. Okay, so that's one way where you put. Okay, so now I'll go and teach you or show you how we actually can calculate the risk reward. Okay, so let me save and then I'll open the other one. Okay, so this is also similarly like what I mentioned, you can catch your entry here. Okay, and then you can actually okay, so you can catch your entry here, put your stop loss here or here. It's up to your risk appetite and also the time frame that you're working on it. Because if it's too tight, then you will keep hitting your stop loss and then you keep losing your equity. Your equity will be eroded or your margin will be eroded. So you don't want to go into, so then the safest one, okay, you will see the invalidation point. Okay, normally will be at least at the second swing high or swing low, and you can go on a M15 or H1 or even H4 daily. I will recommend, unless you go on the position trading or swing trading, long term trading, then you can go two swing low or two swing high. But on a daily candle, you just want to go the previous or the daily low or daily high. Okay, depending on what position you're taking, whether it's a bullish or bearish. Okay, so I'll show you the other one. Okay, we already talked about this. Okay, this is where actually the reward, risk to reward. Okay, so let's say the risk to reward here. Okay, you manage to cash the entry. Okay, somewhere here, let's say, okay, you manage to cash the entry here, so you put your stop loss here. Okay, assuming this is on the daily candle. Okay, you put your stop loss here and you, or H4. Okay, so first you calculate your risk. Okay, this part, this is the first step you should do. Okay, If you're going to find the risk is only 10 pips, then you find the take profit. At least, okay, it should be above 10 pips. Otherwise, it will not make sense. Okay. Okay. So in this case, let's say I just take example, it's 30 pips. So risk is 10 pips, reward is 30 pips. So your risk reward is 1 to 3. Okay. So that's how you calculate. Okay. And similarly, let's say if you take a risk of 10 pips, reward is 20 pips. So your risk reward will be 1 to 2. Okay. So the good practice, okay, or good recommendation or any trading, if you want to keep profitable in forex or in a trading, it should be at least 1 to 3 or 1 to 2. At worst case, at minimum, okay, it should be at least 1 to 1. This is the minimum. But if you are going on a let's say intraday or anything, 1 to 1.5, that means you take risk of 10 pips, okay, and you probably take TP only at 15 pips. Okay, so that's also still fine, okay, but not recommended if you want to really make money, because sometimes it's a 50-50 chance you either win or lose. So you want to increase your probability of profitable probability, okay, to a higher. So it's better to keep your reward is always bigger than your risk. So in this case, 1 to 2 or 1 to 3 will be a right ratio for you to keep be profitable for long term. And swing traders normally go for 1 to 4, 1 to 5, or even higher. They can probably even go to 1 to 6. Okay, they take a very tight stop loss, but they leave their trade for a long time. Okay, so hope it helps you. Okay, always remember, okay, always remember, find your stop loss first. That's number one. Number two, then find your TP or take profit. Okay, then three, calculate risk reward. Okay, so then calculate risk reward, then you'll get your ratio. If it's more than 1 to 1.5, go ahead, or 1 to 2, go ahead, or 1 to 3, go ahead. If it's 1 to 1, it's a question mark, still can go ahead. But if less than 1 to 1, definitely is no. So this is one thing. If it's 1 to 1, definitely it's a no. Okay. And then the other thing is, okay, so hope helps. Okay, how to find TP. Okay, so let me just show you where to find TP. Okay, if you are familiar with the what do you call, if you're familiar with the Fibonacci expansion, okay, normally Fibonacci expansion works like this. Okay, so I show you Fibonacci expansion. Okay, so in a, let's say, long-term bullish trend, you use your Fibonacci expansion. You take your first point here, second point here, third point here. Normally there are few levels Fibonacci expansion will show you. Okay, so you will take 1 or 1.27 or 1.618 or 2.618, or even like it has a 3.618 or 4.618. So these are a few levels you can actually use to find your take profit level. Okay, so we will touch on the take profit and Fibonacci expansion, and then Fibonacci retracement in the next topic. But this is in a short, you use how to find your take profit. Okay guys, thanks very much. Bye.